Rate cuts are back in play. What does this mean for the crypto market? Today we'll break it down for you. Let's get started. Our sponsor today, of course, is Uphold. And you guys, of course, can get involved with our most recent product out there, which is a debit card that gets you returns up to 6%, including XRP rewards. And the way it works is there's two types of cards that you can get, a premium version. You can also get the standard version. Each of them give you rewards. All of what you guys can do is kind of go through what matches up for you guys, get on it. Of course, if you have direct deposit, this plays into it. A lot of super benefits out there with the new Uphold debit card. No credit checks because it's not a credit card. You can use it anywhere Visa is, spend $300 on digital assets instantly. All sorts of features that you guys are gonna love. Let's get into the topics today because we're gonna really talk about where the Fed is going and how this plays into the current market position. If you look at the status right now, Bitcoin, of course, extends gain. Gains are rised above 89,000, and of course, ETH was up over 6%. All of this kind of looking into what the Fed's likelihood of a rate cut could be. And if you consider that, just as a reminder, everybody has pretty much been going in on the dip. For those of you who are brand new at crypto, that was your first gift from the crypto community, is being able to get in on some of these better prices, both on Bitcoin, ETH, XRP, you name it. Everything was on sale over the last several days. Of course, how does this play into where the Fed could be going? Let me go into this next clip because it breaks down a lot of analysis on why Chair Powell might be reconsidering. Take a look.
Fed's December policy decision looked now to be blowing more decisively towards a rate cut, despite the possibility of a significant number of dissent in the December meeting. Comments by leading Fed officials and reporting by CNBC suggest the Fed is, on balance, more concerned with the weakening job market than it is inflation running too high. To be sure, there's a lot of voters on the committee that have either opposed a cut outright or supported a cautious approach to cuts. That could mean multiple dissents in December. But Governors Myron, Waller, and Bowman, and now President Williams, look ready to vote for a cut. Williams' view likely reflects Powell's that the Fed will remain somewhat restrictive even after a cut. So what's happened? The probabilities keep getting higher. They have been down as low as 33% before Williams talked. Now they're at 73 for December, and that same cut has an 82% probability of happening by January. One way dissenters could be convinced to support the rate cut is position the Fed, depending on the data, for a January pause. Waller, who's a strong supporter of a December cut, suggested yesterday the Fed should go meeting by meeting in January. So maybe that ends up being a pause, Becky. I don't know if you make decisions this way, but which decision would you feel worse not having made? And I think the way this balances out is if the jobs data is really weak, the ones that we get after the Fed meeting, I think they'll regret more not having cut for the jobs market than they would having not cut because they're concerned about inflation being around 3%.
That I am in agreement with. If you look on which side of the blade you might fall, because this is really what you're dealing with, is a very, very sharp market. What's amazing to me is the retracement here within the Polymarket. Let me kind of zoom in on this and show you guys when this occurred, because as of last week, we were setting on November 20th a 25 basis points decrease, 22%. What we were looking on the no change was 76%. Now look what happens right here. You start to see this move, and then there's the flip. There's the 25 basis points decrease going up to 65%, and then of course it's just been climbing from there, and as we report today, 84% right now on Polymarket. So most likely we're going to see a December rate cut. Now what does that look like in January? Because I think this is another factor. Even if you look at January, even though it did dip down, it's still well over 50%. Zoom in on that for you guys. Still over 50% on a no change. And then, of course, that kind of puts into the position that they were talking about there on CNBC, is that these governors could say, hey, go ahead and make the cut now. It sets you up for a pause in January. And remember, that's the end of January, so you're going to see quarterly earnings coming in. You're going to see a lot of things coming in after the end of the year, which will give the Fed a little bit more breathing room going into the end of January of being able to make the right move as we head into a very busy spring season going forward. Other things you have to look at this, of course, is the theory, and this is a concept we've talked about before, is the shadow Fed. Because remember, everything is barreling down toward the potential, well, I shouldn't say, the eventual replacement of Chairman Powell. And of course, you look at that along over with what Trump's been doing in terms of announcing, saying, hey, I've got the next Federal Reserve chair. I think I do. Obviously, he's been talking about this. Well, many people have been talking about this shadow chair and also kind of the shadow Fed in general, because a lot of these moves maybe are pushing this dissension that we're seeing so much. And we're starting to see a little bit of a left versus right kind of scenario play out in the Fed. I want to go to a clip real quick because this is Scott Bessent kind of breaking this down. Take a look.
And Andrew, I'll tell you, one of the things in terms of the criteria that I've been looking for that I have morphed a bit on in the fall when we started with 11 candidates is in talking to these candidates, I realized the Fed has become this very complicated operation. It's no longer just a price setting of money. There's this very complicated calculus between the monetary policy, the balance sheet, and regulatory policy. And we've really emphasized in the interviews what's the interplay for that calculus in terms of the best way forward for the American economy. And what is each person's point of view in terms of protecting the American people, protecting the economy, and moving forward with the dual mandate. I think it's time for the Fed to move back into the background like it used to do.
Interesting statements there by Bessent, because he is getting to this point of where the Fed should move into the background. I don't know that the Federal Reserve will ever move back into the background, because they have been one of the narratives of global macro that everybody is following. And I'm talking about every country out there is looking to the United States and what is happening there. Now, the real question is how does this play out with Trump's strategy to basically maintain or get control of the Fed? There's two things that could go on here. One, if he does get control of a positive move in terms of yes men at the Federal Reserve, many people would look at that and say that's very uncertain for the markets, and in most cases, a lot of investors don't like that. The other comparison that you could look at is maybe a strategic step in, meaning slowly taking control or getting the right kind of people in the Fed that would align with the Trump administration. Maybe that would be a softer play into the markets. I still don't know how that's going to respond, because I anticipate that Trump will be more like a wrecking bull, and that is getting all the way into May and seeing drastic drops in the Federal Reserve rate, overnight rate. So this could play out either way, guys. One thing to watch, though, is this right here, and that is the government shutdown still setting up for January, but not necessarily a high probability as of yet, only 27%, and it's been declining a little bit from holding at 31. This is one that will be interesting, but remember, DC operates on different time than we do. All of a sudden, it's going to be an emergency thing, and that's usually what you get into, which is the narrative and the news cycle that controls how a lot of constituents vote. The other thing I want to get into was Trump's healthcare fake out, because there was a big announcement. He came out, did a lot of posturing around this whole big shift, and then, of course, it got changed. Take a look.
We're learning President Trump is planning to unveil a new health care proposal. It could include a temporary extension of the Enhanced Affordable Care Act subsidies, which are due to expire at the end of the year. Zach, thanks for being here. As I noted, we are very much still waiting for specifics here. I'm sorry, this has actually been, sorry, Zach, we're getting breaking news while I'm talking to you. I have learned that the White House has postponed its expected unveiling of this new health care proposal. It was expected to be unveiled today.
Yeah, I saw this over the weekend, and it was interesting because you had a lot of people that are very pro-Republican and just, retweeting and saying, oh yeah, this is it. This is going to be the shift that Americans need in terms of health care. And immediately the Republicans pretty much struck that down, got Trump to retrace on this. This is a big deal because I feel like it does put the Republicans at a disadvantage when you think about how they're going to deal with the situation of extending the health care. And this impacts the markets because the markets do respond to these kind of things. So this will be interesting to see how this actually gets done, whether or not Trump and the Republicans will come to an alignment on this that can also align with the Democrats. There is a lot still brewing. Another thing that you want to play into the market and how you're looking at your investments is, of course, looking at the AI trade. Now, this is one that we've talked about before, but this is a little bit unusual. I would agree with Kobeisi on this one. NVIDIA is now down 6%. This was after earnings was flying high just last week. Remember, NVIDIA actually outperformed. Meanwhile, the S&P is now up 0.2 on the day. Now, there could be a couple of things here that you really have to consider, and maybe the market has started to look at this incestuous idea of financing your customers so they can buy your product. Might not necessarily be a great thing. And I understand we are in the early days of major involvement in how AI is going to be integrated into the broader market and also the broader strategies around where tech is going. But this is never, I'll give you an example of this. Back in the late 90s, early 2000s, Dell did this a lot. And they were building a computer titan business. And they started financing a lot of their retailers to sell more Dells. And essentially, that was great for them for a while. And then all of a sudden, it was not great for them. And that's the question I wonder if NVIDIA is facing now as we continue to see them backstopping a lot of their own customers and no really end in sight in terms of how this is going to end up. So could we be seeing an AI bubble playing out? Because this will affect crypto in a big way. Look at this right here. This might be telling the tale. Apple down 2%. This is off the all-time high. Google down 2%. You can kind of see Amazon down 15%. Big deal. Microsoft down 15%. NVIDIA down 16%. 20 off on Tesla. Meta 25%. Palantir 26%. And Bitcoin down 33% off of its all-time high. But Ethereum 45% down. That is a sale. That right there is a sale. Coinbase down 46%. Last up here, MicroStrategy down 69%. And if you consider that along with Michael Saylor's strategy in general, the stock is bleeding. He's not backing down off of this bet. You look at a couple of points in the highlight here, over 60% on the year. Strategy shares are up by more than 500%. This, of course, is looking at the long term, but Apple recorded 130% gain in that same period. So there are benefits to this. The real question is are investors willing to hold this long term? Are they willing to go that extra mile to be able to support what Michael Saylor has been doing? Other people say no. You've got JP Morgan potentially on a short here. I don't know that is a short as big as they're claiming. And I definitely do not think that if we saw a pump of 50%, that would ever put JP Morgan at risk of bankruptcy. So that, I think, is just a little bit more of sensationalism. The point is that this is like any other trade. You're either in it long, you're in it short, or you're in it to hold for a long period of time. Where are you guys? Let me know in the comments down below. Hit them down there. We always love to get your feedback, by the way. If you're not subscribed to the channel, make sure and do that right now, because this is the place to catch all the news around crypto, tech, and how this is changing the financial industry of the future. Other things you got to look at within MicroStrategy. This is kind of interesting. Strategy will definitely be removed from the MSCI. And I think that hurts MicroStrategy. And I think it hurts them in the sense of validity to Wall Street. And this is another problem, which is what Ted was talking about here. I love this guy's X handle. But strategy, not a real business. Volatility product for hedge funds. We're seeing a lot of people now starting to play this in the wrong way, which is mostly in a short position. Remember, Tesla was in this kind of hunt in their early days where Tesla had a lot of shorts. Elon was constantly fighting against them, and eventually it broke out for Elon. But mainly it was on the principles of where that business was going. And of course, now it made it look like this was a great bet. But the question is does MicroStrategy have a narrative like that? According to most, not necessarily, because what you've got is basically a business that's holding Bitcoin, and that is pretty much it. Let me go to a clip real quick, because this explains a little bit more. Take a look.
The market could be very skeptical of the prospects of that crypto itself, because a stock is a discount to the future, and then a crypto token is a discount to the future. So the stock, in theory, is going to be signaling price expectations about the crypto, maybe even before the crypto does. That's why if someone's trying to figure out when Bitcoin bottoms, they're actually better off watching MicroStrategy.
Okay, so when you listen to that clip, there's two things here. One, of course, is, and he's right, I will agree with Tom on this, is that when you have an asset like MicroStrategy that is declining in the market, it does hurt the narrative of the underlying asset. Now, the other thing that he's also maybe prepping for, because this is something that he also talked about in that interview, is if you think about all the DATs that are currently in the ETH ecosystem, there's a lot of junk in there. Could he be setting up to acquire some of these DATs, which would give him the benefit of a better market position around ETH? This, of course, would shine a big light on BM&R to become the new MicroStrategy of Wall Street. Maybe there's a bigger plan going on here with what Tom Lee is up to. We'll see. He goes further in this interview and this topic on where the Fed is and how it relates to Ethereum. Take a look.
Yeah, macro is actually really a big deal, Chris. Crypto was the first really to sniff out and it's going to be responding to a Fed, right? And if the Fed remains hawkish and executes policy error, that's bad for crypto prices. That's why it's really important for anyone involved in crypto to understand that what the Fed's going to do is a big deal. I think the Fed is in a very difficult spot because if there wasn't what looks to be as political interference, I think the Fed would be cutting without question now. Ethereum and Bitcoin are public tokens. And so their price isn't going to be purely anchored on fundamentals. They're going to be reflecting investors' perceptions. There is downside, maybe to 2,500, but that's minor compared to the upside of trying to discount a super cycle. So we think ETH can be 7,000, 9,000 by the end of January, and that's a huge recovery move. But that's also pretty typical of what could happen in the fourth quarter.
All right, a couple of things within that clip. He does get into the point of the Fed having a very interesting position right now because it does affect crypto, and crypto is one of the ones that sniffs out what's happening in terms of policy errors for the Fed quicker than any other asset. One thing many of you would say is, well, Paul, hey, Tom Lee's been calling for all-time highs by end of year for both Bitcoin and Ethereum. Granted, that is the case. I would agree with that. Under certain conditions is what he has kind of been falling back on. I disagree in the sense because he's been very bullish. But him pushing this into Q1 isn't, at the very least, an interesting reposition on the market. And he's a little bit less bullish on Ethereum than he was previously. So clearly he understands the impact of the macroeconomics playing into this. All right, so I want to go to this last clip, which is Cathie Wood talking about both Bitcoin and also quantitative easing and the impact that's going to have. Take a look.
Maybe it would become half the market cap of gold. It would take some share from gold or maybe expand the market. Well, that market has doubled. So I don't think our bull price should change all that much. And I probably should have been quicker to say all things equal on CNBC the other day. So I just wanted to clarify that. We are very bullish on crypto assets, but we know that they are the most susceptible to liquidity drawdowns. And I described earlier, we have a number of reasons for liquidity drawdowns now, but we think that they will be cleared by the end of the year. And hopefully by December 10th, when the Fed eases.
All right, of course, that was Cathie Wood addressing her previous statement. She was talking about even on CNBC where she had adjusted Bitcoin down, but didn't allocate for the market penetration that we've seen in other assets. So I can get where she's coming from there. I guess the real question is if we continue to see MicroStrategy moving down in the market, if they get delisted, those kind of things happening, what would be her position around Bitcoin at that time? Will she continue to hold this bullish narrative? Or, because remember, she's holding both assets, both in Ethereum as well as Bitcoin. Let me know what you guys think, how she's going to fall on which side of the asset war that's going to be going out there. Okay, this is another piece of news that hit the market. Klarna, of course, introducing Klarna USD. This is their first stablecoin. The other thing they're going into is being able to purchase crypto with loans, 30-day, almost like payday loans, that are interest-free. And the idea is, and I'm not supporting this, guys, for those of you who are even considering this, but the point being is that there are those who don't have access to digital assets right now because they don't have the liquid to go out and do it. This could give them very light exposure, even if it's only $1,000. If you were willing to lose 5% of that. So if you think about that, $50 all right, you could go out and say, I'm willing to lose 5% of this if the market doesn't go up in 30 days, but if the market goes up 10, I'm up 10%. So those are the kind of scenarios that could be going into Klarna's strategy. And let me know if you guys would even use this. I think most people on our channel would probably not go in this direction, but maybe you're a brand new crypto investor and this might be the route for you. Hit some comments down below. Let me know how you would do it. All right, one last thing here, guys. I want to jump on with Polymarket. As you see here, they just got CFTC approval for intermediation. This, of course, paves them into the United States. One thing to consider, though, is back to the point that we were talking about at the beginning of the show, is the amount of instability that is happening around this Fed rate cut. And I know that there's some announcement now that just got broke on Twitter, is that Kevin Hassett could be the new Fed chair. Many people would say that could be bad for crypto. That also could be very hawkish for a rate cut in December. So you can see the craziness that we're going to look at between now and December the 10th. A lot of swings. So make sure you guys are subscribed to the show. And if you are not in our own private member group, that's the Barron Market Edge. You guys, of course, can join for free. And of course, you'll get everything from free research, insights, and more. I drop an email out to you guys every week. Click the link down below. And of course, if you're not following me out there on X, it's @Paul Barron. We'll catch you next time right here on The Paul Barron Show.